What's up, everybody? Rob Wilson here, host of the Money Monday show on Rob Wilson TV and founder of the March Money Madness Bracket Challenge. I want to thank you guys for joining me back here. I want to give you a quick recap of all of the happenings in round two, what happened with the individual stocks, and what are the key takeaways that you can leave with to help you out with your investing in the future. So right to it, one of the key matchups in the technology region in the second round was number 16 Apple versus number 8 Salesforce.com. And Apple, up 4.1% on the week, defeated Salesforce.com. And Salesforce was down marginally, only 0.22%, but that wasn't enough to win this matchup. And I know you're probably thinking, well, what happened with the Apple stock that it was up 4.1% this week? So let's go to it. Some rumors started to surface about the new iPhone 5S and saying that it could be released at the end of the summer of 2013. And not only could it be released then, but that it might have fingerprint sensors built into the home screen button that would allow you to use your phone to make payments at the gas station, at McDonald's, at other places like that. And if they can integrate that technology into their new phones, it could really create a good demand for these new devices, and accordingly the stock went up. But I also think that investors are starting to feel like the stock has just gone down too much or getting pretty cheap. You see that the stock has gone down, the price of the stock has gone down from 700 all the way down to a low of 420 earlier this month. But it's starting to recover now. And so it's gone from 420 to 450 in a short amount of time. I think investors think that the sell-off may be a little bit overdone, and you see the stock price starting to recover here. Good place to go take a look at these charts. As you can see at the bottom, finance.yahoo.com. You can take a look at the charts and see how the price has moved over time. Another key matchup, second round technology region, BlackBerry defeated Zynga. BlackBerry was up about 0.5% on the week. You know, they have recently released a new device as well. But this matchup was all about Zynga, as it was down 5.5%. So you're asking yourself the question, what was up with Zynga stock this week that made it go down 5%? Well, just as we talked about valuation with Apple and investors thinking that it was getting too cheap, investors can also start to think that a stock is getting too expensive. So here you see the price of Zynga has gone up this year a whopping 46% just since January. And I think investors are starting to think that maybe the stock is getting a little bit ahead of itself. Now, why might that be? Well, the first problem is the company isn't making any money. If you take a look at this metric, the PE ratio, which is the price to earnings ratio for a stock, you don't see anything there. So if you see that and there's an NA or there's a dash there or there's nothing, it means that the company is not profitable. They're not making a profit currently. And you can further see that with this metric. EPS means earnings per share. So how much is the company earning per each share that it has outstanding? And right now it's a negative 28 cents. So you see that the stock is not making money right now. Do you want to pay a lot of money for a stock that isn't profitable? I think investors are starting to pull back from that just a little bit. So let's take a look at the financial region in the second round. And interesting, because Aflac and American Express were the only two financial stocks in this region that had positive returns on the week. MetLife was down almost 4.5%. Chase, even though it won its matchup, was down 2.4%, but that was less than the 2.6% that Wells Fargo was down. Morgan Stanley was almost down 6%. And Bank of America won its matchup. It was almost flat, but just slightly down. And PNC lost, as it was down almost 1%. So again, asking yourself the question, what's the story with the financial stocks this week that most of them were down? Well, all of you may not be familiar with the Republic of Cyprus, island country located in the Mediterranean Sea, but their banking situation and the country situation is so bad that they said that they were going to tax people's bank deposits in order to pay off their debt. And as you can imagine, that sent tons of people to the ATM trying to withdraw their money. Really just not a good situation. And what happens is investors here are wondering, could the same sort of debt problems happen here in America as they are happening in Cyprus now? Don't forget, we are just really getting out from the details of our own financial crisis. And so when you hear things about banks going bankrupt or having debt problems in other countries, you start to wonder if that's going to happen here at home, and it's going to affect stocks here in the United States. In the consumer region, Best Buy won its matchup this week, up a whopping 6.2%, and Best Buy was actually the stock that was up the most on the week as far as March Money Madness is concerned, 6.2%. Burger King had a good week, up 3.65%, but not enough to defeat Best Buy. What was the story with Best Buy? Well, you know what? They have tried to put themselves on a road to recovery. They've started cutting a lot of costs. Investors like that when you like costs. They've also done a few other things. There's some news out there that the Congress is passing laws that some internet sites are going to have to now start charging sales tax. And this is good for Best Buy because Best Buy tended to lose a lot of business to places like Amazon.com because Amazon didn't charge sales tax. So now there's a couple of things going on. Not only is Amazon going to have to pay sales tax, but Best Buy has decided to match the prices that you can find on Amazon.com. What a lot of people were doing were going to the Best Buy store so they could touch and look and feel and try out the products. Then they would search on their phone on Amazon.com, see a lower price, and just go home and buy it there. Now that they're matching the prices and Amazon's going to have to pay sales tax, the playing field has effectively been leveled, and that's been good for Best Buy, and the stock is reflecting that. Also in the second round, consumer region, CocaCola up 3.1%, defeating Under Armour. Basically flat on the week, but down 0.09%. So what was going on with Coke this week that allowed it to go up 3.1%? Well, news that normally isn't good and things that we don't want to hear about, people getting laid off. Investors actually cheer that news. So Coca-Cola came out with an announcement, said they were going to lay off 750 people in the United States. And if you're going to lay off that people, what that means is your costs are going to be lower. So in turn, hopefully that means your profit is going to be higher. And when you're investing in stocks, you want profit to be higher, even if it comes at the expense of layoffs. And so this announcement seemingly boosted the stock this week, and it was up 3.1%. Second round in the industrial region, Fedex down a tremendous 9.7%, which allowed Boeing to take this matchup, even though it was negative on the week, but a lower amount. It was only down 1.86%. Well, what's going on with FedEx? Well, companies have to come out with earnings reports every 3 months because investors want to know if you're making any money. Well, FedEx came out with their earnings report and announced that their profit went down a whopping 31% from the year earlier. So that gets investors very nervous when you have a big number like that. Does that mean that the economy is going down, or is there something really wrong with your business? And hence, you come out with numbers like that, people are going to sell your stock, and that's why it was down so much. So you want to be mindful about earnings when companies are going to release their earnings. And if you want to know when one of your stocks is going to release their earnings, you can come to this page on Yahoo Finance. You type in your stock there, and then you'll see here that Apple is going to report earnings on their next time on Tuesday, April 23rd. And you can also see what the estimate of their earnings will be. So right now, the analysts are estimating that Apple's going to earn $10.18 per share. And you can start to develop your own opinion whether you believe that they'll hit that, whether they'll exceed it, whether they may fall short. And that can start to guide your decisions on whether you want to buy, hold, or sell stocks that you own. So the key takeaways for this week. Number one, you want to really pay attention to the news, such as the banks going bankrupt in Cyprus and trying to tax the holdings that their individuals have in banks. Things like that, things that are happening overseas can affect your stocks here in the United States. So you want to pay attention to what's going on in the news. You want to form your own opinions on valuation. You want to be able to decide whether you think a stock is cheap, like Apple could potentially be right here because it's gone down so much, or like Zynga because it's gone up so much just since January. You want to not only think about whether a stock's going to go up or down, but levels at which you think a stock is cheap or expensive. You want to be able to evaluate business decisions. So if you're reading, again, the Wall Street Journal or Business Week, and you see an article that it says Best Buy is cutting costs, they're going to price match, you want to evaluate that and think about how those decisions are going to affect the stock. And lastly, you want to be able to analyze company earnings reports. So you want to be mindful of when your companies and stocks that you own are going to be reporting earnings, whether you think they'll exceed or beat or match what the expectations are out there in the market. Because again, as I just said, that's going to guide your decision making on whether to buy, sell, or hold your stocks. So any of you out there watching this video, if you haven't signed up for March Money Madness, there's still time to play. We're only halfway in. There's going to be a lot of fun, a lot of learning that you can get over the next couple of weeks. So go to marchmoneymadness.com right now and sign up. Thanks for everybody that's playing, and I'll see you after next week. Don't forget to get your picks in, and we'll do the round 3 recap next week. See you there.